I didn't record, fuck. It's recorded. What's up guys, Dim Nuxer. So in today's video, we're going to go over some of the volume analysis and some of the new method that I came up recently. And this method could prevent you from taking a lot of potential losses and also can help you to figure out where the longs and the short sellers are and what are currently thinking, especially during the live market. And this method is based on the current market conditions. Now, different years are very different. I'm going to give you a decent idea about the market back in 2016, 2017, and now 2020. I'm going to mention it later on in the video. So volume, let's simply go over flow rotations. Now, I have mentioned flow rotations many times back in the few videos that I made. Basically, is if the stock is trading 30 million volume on the current day and the flow is 3 million, you are using the current day volume divided by the flow. So 30 million divided by 3, the stock rotated about 10 times. And I also talked about volume predictions. Now, volume prediction is you are using the first hour of volume, and by using certain formulas, by tracking enough statistics, you should know how much volume is going to trade throughout the entire day. And you are estimating volume divided by the flow. Then you should know, okay, by the end of the day, the stock should rotate anywhere between 8 to 10 times or 8 to 12 times. You have that range in your head. Now that should help you a lot, especially when you're shorting your stock and when you're going long on stock. You want to know if there's enough demand. You want to know, okay, if the stock is too crowded, I should stay away from the stock. And these things are the basic volume analysis based on the flow. And the third method I want to talk about is called the volume disruptions. And I basically made up a name for it, if you want to call it whatever you want to call it. But let's introduce how it works. You can use this, especially during crowded stocks. And also you can use this volume analysis. And also if you want to make more profit, let's say you have a general bigger account, you want to maximize your profit and you don't really know how, because scale in penny stocks are generally really difficult. Is because when there's not enough liquidities and you're shorting a huge amount of shares, and basically you are playing with yourself.
You played yourself.
And that typically ends up a really bad losses. And also same thing if you're going long. If you're long way too many shares and you are not fitting the current market conditions or the liquidity, then it's going to turn into a really bad loss as well. Let's get into this method and hopefully you guys can learn something new. So market conditions. Now generally we're facing back in 2017 to 2019, the general volume can be anywhere between 40 million to 100 million. Maximum can be topped at around 150 million to 120 million. And that's the general maximum volume we're seeing in the last 2 years. Now average volume can be traded a day is anywhere between 20 million to 50 million. And that's where my comfort zones. Nowadays, well, we're having 200 million shares a day, 300 million shares a day, and people are very confused. They don't really know how to really trade that type of crowded stocks. For beginners, this is what I want to talk to you about. When you are just getting into these industries, especially when you're looking at a very crowded stocks, I understand you want to be part of it, but to be consistent profitable, you need to be patient to wait until the stock perform or bounce. Now this can be used in many different scenarios for huge resistance bounce short. And that method can slowly grow your account and don't really worry about the first green day. By using this method, you can rationally tell yourself, today's trade is not really for me. Also to help you understand what's going on in the level 2 and what's going on in the short seller's mind. So this is the example that I select. It's called GNE. The flow is relatively high, 13 million. I think it's anywhere between 10 to 13 million. The market cap is under 100 million. You want to look at the historical resistance, how much volume it got, where is the individual resistance and where is the consistent resistance. For GNE specifically, if you want to look within a year, there's about 70 million resistance at $4. You can see the stock went from 2 to 10. Now, since you know the resistance is at 4 to 5, you want to look at the intraday chart. When the stock is trading close to around 11 a.m., it's slowly hitting that $4 to $5 resistance zones. So GNE is already trading 80 million shares in the first 2 hours, and the total market hours is 9 hours. And we have 7 hours left. So we know in the back of our head that stock is going to trade 200 million shares because we're using the first 2 hours to try to estimate the entire day volume. Once we know it's going to trade anywhere between 200 million shares to 500 million shares of the day, and we're looking back of that 4 to 5 resistance zone, and to think about it, if the stock is trading that much volume, it will definitely overwhelm the resistance volume. If the stock's trading way too much volume, it's pretty much 10 or 20 times the volume compared to the resistance. You have to treat the stock as a fresh chart, so you have to ignore the resistance. In this case, people don't really know how to really use resistance. They got completely destroyed. So when you're looking at GNE, the stock went parabolic from 2.6 to almost $7. And there's not big pullbacks for short seller to get out. So when you are shorting a stock that is based on 4 to 5 resistance, you have to short around 4.2, 4.5, or 4.8. And the stock didn't really give any pullbacks. It kept parabolic until 7. In this case, the stock actually pulled back from 7 to 5. Now, when people don't really have time or they don't have a pullback to cover their shares, they're waiting for a large pullback. So they have to take their losses around 5 because they broke through the resistance of that $4 to $5 resistance. Then that $4 to $5 becomes the ultimate support. And also the short seller will become support too because they're covering their shares to potentially get out for a smaller loss. That's exactly why the stock held that $5 when almost to 10. When the stock hit 10, it's trading almost 300 million shares to 400 million shares. And this is where volume disruption comes in. That once you know, okay, the stock went parabolic, the short seller did not get out, they want to get out around 5, and they held the support around 5, and short seller got really nervous, they covered their shares, and it's completely fresh chart. The volume is hitting the top of average volume that's being traded in 2020. Given all those conditions and criteria during the live market, you will be able to analyze that, okay, well, on the next day, the stock will unlikely to get 300 to 400 million shares in one day or above that. So the liquidity on next day is not going to support today's liquidity or breakouts. For the stock to break out to make a newer high, it needs to gain more volume compared to the yesterday, which is already trading 300 to 400 million volume. Now that's pretty much impossible. So that's why when the smart buyers bought the stock and they know in back of their head, heavy volume are unlikely to support yesterday's liquidity. This is why the stock dumped from 10 to almost 5. Now it's halted probably on a T12, and when it opens, probably open around anywhere between $1 or $2. So in conclusions, there are several things that go into it. First of all, you want to know what short sellers are thinking. And also you want to know, okay, is the volume overwhelming the resistance? Third, you also want to know, okay, how much volume is trading? Is it hitting the top average volume in one day? And just by knowing all those 3 conditions will help you potentially avoid a lot of losses, and also that you will know which support is going to hold by using short sellers mindset that they want to take a smaller losses that you can use them as a support to benefit your long strategies. That will be all of the points I want to cover today. Thank you very much for watching. If you have any questions, please leave a comment below. I would love to answer it. Stay safe, be patient, and don't rush into a trade. Make sure to keep your risk reward under control. And that'll be the end of this video. Thank you very much for watching, and I will see you guys in the next one.